Did you know that wealth creation is within reach for everyone? My name is Esther Sande. I'm a financial coach. I will help you understand how to create wealth, how to grow wealth, how to preserve wealth, and eventually sustaining it. But remember, we can transfer that wealth to the next generation. So in today's video, I'm here to share with you some financial concepts that all of us need to understand. They're basic knowledge, some questions that I want you to think through as I ask you these questions. Now think about you working. All of us work every single time. But do we know and do we understand how that money works? That's the first question you need to ask yourself. Do you understand how money works? The second thing you need to ask yourself, as a person who is making that income, what percentage of that income comes to you personally? How much do you pay yourself first? Remember, you get paid for the work you do, but how much of that do you pay yourself is very, very important, and I will help you understand how critical that is. And now you need to know that as important as it is to make money, it's also important, my friend, to understand how money works. And that's why I'm passionately doing what I'm doing, so that me and you together, we can understand the money game. When we understand the money game, it's easy for us to understand how to create wealth. And that is what we will be working together to achieve. Financial security is not a dream, my friend. It's a priority. Remember, whatever you put your focus on grows. So the moment you start analyzing, how much did I earn? How much did I spend? Where did it go? How much is left? And where did it go? When you start being intentional about your financial planning, that's the beginning of every dream that you have. Now, the other thing that we want to talk about is, when was the last time, my friend, you sat down with someone to review your plans, to share your goals, to tell them what your dream is? And that's what we will be doing. Now, before I go into all those things, people are asking me, Esther, is there a need of what you do? And this is what I asked them, right? I asked them. These are some of the questions that I get over and over and over. How can I pay off my mortgage early and get out of debt, right? How can I buy a home? How can I secure my monthly income? How can I afford good child education? How about if I want to retire early? How do I save on income tax? How do I transfer my property to the next generation? How do I make sure that I protect my income and become debt-free? All those things explains the need of what we do. And if you have any of those questions in your mind, this video is for you. Now, hear me out. I am a very strong believer of having a proper financial blueprint. And if there's anything that you will come out from this video with, is how to set up a proper financial blueprint. Now, when I talk about proper financial blueprint, I want you to paint a picture. Paint a picture in your mind about a dream home. What exactly are you looking for in a dream home? You want to make sure that that dream home has a proper foundation. Now, thinking about a home, we want us to have that structure in our mind. Think about having a proper house, right? The foundation now, when it comes to financial blueprint, it means the income you make, ability for you to function is very critical when you think about having financial freedom. So we are starting from the basic. Now, let me explain to you what I mean by having a proper foundation. Now, think about today you have a job, and today you have all the energy and God has blessed you with good health. You can go to work. Now, you can go to work and pick as many shifts as you want. But let me tell you one thing. If a critical illness, God forbid, comes in, it will sweep out your income either temporarily or permanently. Now, another thing that affects your ability to make money is a disability. Now, majority of people tell me, Esther, I don't think that is something that can happen to me. Yes, nobody thinks that can happen to them. But let me tell you one thing. We live in North America, and this place is fast paced, right? So let's say for a province like Manitoba, Canada, where we get a snow, right? You didn't clean up your driveway, or some snow became glass and you're coming from your house and getting into the car, you slide on the glass and now you break your back. You can't work for the next 3, 4, 5 weeks. Some people may take up to 6 months. Then what happens to your income? Now people tell me I have employment insurance. That's a good thing. Having employment insurance is very good asset to have. But tell me how much percentage of your income is replaced by that. Majority of us know that in Canada is anywhere between 60 to 65% of your monthly paycheck. Now think about the economy right now. People are struggling to make ends meet with 100% of their paycheck. Now think about when that paycheck has been cut into 60 or 65%. What then happens? You want to go back to work as soon as possible when you're not ready, because your foundation, your financial planning has failed from the beginning, because it's from that income now you start thinking about, oh, what can I do with that income? Now, we have a foundation, we have protected ourselves from critical illness, disability, and then let's think about the worst case scenario. There's one thing that is guaranteed in life. Everything that is born will one day die. That's it's a painful reality that we all have to accept. Now, the thing is, we are not saying it's going to happen to me now, but I don't know I will be there to talk to you tomorrow in this video, right? So I have to make sure that the income I have is protected for the next 10 years or 20 years, just in case all these dreams that I have, all these ambitions I have as a family, as a person, or as a business owner can still continue. Why? Because when something happens and my income is taken permanently, there is a replacement. I actually transferred the risk to the next party. Now we have built that foundation, right? What comes next? When you have a house that has a proper foundation, then you want to think about pillars. Pillars are those, some are having bricks, some have, like where I come from, we build house on bricks, right? Stones. Some have stoned house, right? Some have like wooden and whatever. But when I'm talking about financial blueprint, and now we have protected the income, let's talk about the pillars. Pillar number 1, a dream of every family. How can I buy my first home is an important dream and a great ambition everyone has. It's better for you to have a home that you call your own than renting a home. That's everyone's dream. But let me tell you a little bit about that. Now, buying your first home is a good thing, but I want you to understand these pillars of financial blueprint have the pros and cons. Now, one of the things that comes with you having a house, unless you're building that equity in it, which you can have access to it tax-free if it's your own, your own home, right? Now, the other thing I want us to understand, I know when God blesses you with a good income, I tell people, make sure that your cash flow increases every time. So when you jump from one house and now make it bigger, you have made it a big liability. Now, anything that takes money from your pocket is a liability. And remember, in North America, when you pay off your house, 2 things will still need to be paid. Property taxes for that house and insurance to protect that house. So as much as you become mortgage free, you still have to plan that. And that's why I started by setting your foundation. Make sure that there will be enough income, cash flow to take care of that property taxes and home insurance when you have retired. The second pillar I want us to talk about is registered retirement saving plan. Registered retirement saving plan is a strategy, a saving vehicle that you can use to defy your taxes. Remember, it's not tax-free when you take money out. You have at least 18% of your gross income allowed to be put in. So that money grows if it's invested somewhere. Now you have a seed and the seed is producing crops. So when you go and withdraw that money, you're not just paying taxes on the investment you put. You'll pay taxes on both the investment and the profit that comes with it. So it's very important to understand what RRSP is, Register Retirement Saving Plan is, so that you know whether it's a strategy that fits into your financial situation at the moment or it needs to wait. Strategy number 3 is first time home saving account. Now this is a new account in Canada. At least it began in 2023. Now this is account where if you have no home and you're planning to buy a home, the government allows you to save up to $40,000 into that account. The annual maximum you can do is $8,000 a year. Now what I want us to understand with this account is this: when you save money there, if it's invested in a company that helps you to grow it, it will generate more, and therefore you can use it towards your house. But if for some reason you choose not to use that money to buy a house, that money may be prone to taxes, right? So it's also important to understand the pros of having it and the cons of having it. Now, going to the 4th strategy is what I call tax-free savings account. Tax-free savings account is a TFSA. When you have a TFSA, the moment you become a PR in Canada, let's say I came in 2010 and I never opened a tax-free savings account, it's very important to check with CRA. Check your taxes, because that lump sum space that everyone has from the beginning, it's anywhere between 80 to 92,000 depending on when you came in. So what does that mean? It means until I fill that space, right, I have room. But after I fill that space, there's a limit I have to do every year going forward, right? After the space is filled. Going forward, this year is $7,000 a year. So you put $7,000 a year for the next little bit and let that money work for you. But always remember, if you over contribute in tax-free savings account, my friends, there's a penalty from the government. You have to pay 1 to 2% every single month. That over contribution stays on your account for the entirety of that account. So make sure you understand, you're checking to make sure that you're not over contributing in that account and you're not under contributing if you have cash flow, right? Now, the other strategy we have is called non-registered savings account. Now, non-registered savings account is for people who say, you know what, Esther, I have filled my 18% of RRSP room. I have filled my tax-free room. What option I have? And I already have my first home, so I can't fit into that category. Yes, there's a strategy for you. If you're running a business, or you have an organization, or you're a group of ladies or men or a team or a family, you want to save money together and let it grow, this now registered investment account gives you that option. Now, how does it work? It doesn't have any limit. You can put there as much as you can. You can put there as little as you can. What you need to understand though, the money you put in there, as long as it's growing, the profit you make is 50% capital gain taxable on your current tax bracket. For example, I have $10,000 saved in non-registered savings account. Now I have a profit of $5,000 because now the account current market value is $15,000. I'm excited about $5,000, but wait a minute, don't get too excited, because that $5,000 now, $2,500 is yours tax-free. But $2,500 you have to now pay taxes on your current marginal tax bracket. So that's what it means, 50% capital gain taxes and 50% tax-free. Now, the last strategy which I talk about over and over is when you have a good advisor who teaches you that using an insurance plan in North America can become part of your saving vehicle. And when I talk about this, I'm talking about a permanent life insurance like a universal life or a whole life. Now, these two plans are totally different, but they work, they are both permanent plans, but they work differently. They don't fit everyone. There is no one size fit all when it comes to financial planning. Make sure you understand, if you're looking for something flexible that is permanent, you're thinking about universal life. If you're thinking about something that is dividend paying to you, it has some guarantees, you don't want to get shocks, in economy, then you look at whole life. Now, I gave you 6 pillars. Do you remember those pillars? Quickly summarize that. Having your first house is the first pillar. Second pillar, register retirement savings plan, savings account. Then you have a tax-free savings account. You have an unregistered savings account, and then you have a whole life or a universal life. Now that we have done a good job, paint that picture again. We did a foundation. We have pillars now. Don't forget the last stage, because that is the most critical part of your planning. That means you have to build an umbrella. When you build an umbrella, you're doing what we call estate planning. Estate planning means this good job you have done, my brother, from the beginning. How do you preserve that in your family lineage, in your business, right? You want to make sure that you have a will in place, number one. Number two, you want to make sure that you have either a life insurance to protect that, or you have a lawyer who will help you plan your estate to execute it if in case you don't have a will, right? So make sure you think about that. Foundation, pillars, and roof. And people ask me, so what is important? Let me ask you, what do you think is important? Can you have a roof without a pillar? Can you have a pillar without a foundation? So we all realize that we have to start from the base. So financial blueprint, my friend, starts with you preserving the ability to make income. We have to transfer that risk to someone else so that we can go ahead and plan what we need to do. So again, foundation is critical. Protect your income. Then let's plan your goals and do it strategically. Majority of families have 1 or 2 pillars in place. I teach my clients, I teach my family, I teach my friends that, you know what, creating wealth requires you to have all the strategies in place, done properly. In the next video, I'll be showing you how those pillars can connect into each other. I will use an example of how you can do it so that you can see how each one of them gives you value for your dollar. Thank you.